Hey, so we are live. Welcome everybody to my page. I'm so excited to do a live, kind of like a Facebook talk show. I haven't been doing one for a while now. And the main reason why I wanted to do something live is because over the last couple of weeks, I think leading up to maybe even a month, many people have been dropping me private messages to say, Mario, what are some of your views of what has been happening in the market? And I thought it's timely now for me to actually hold something like that because I think it's just all coming to a head. You know, many people have been asking, is the stock market dropping? The crypto market is dropping. And I do want to share some insights, but I thought I'd do something even a little bit more special for everyone who has taken the time to actually log in and join me tonight on my page. So maybe for a start, even before I introduce my guest, let me know very quickly if you guys are logging in live on Facebook. Just type something in the comments. Let me know where you guys are coming from, which countries you guys are from. All right. And once I bring in the guests, as we start speaking, I really want to spend the next 1 hour. We'll probably do maybe half an hour to 45 minutes of us speaking. I'm going to be engaging 3 of my guests, and I want to reserve the last 15 minutes if you guys have any questions. But as we are speaking, all right, please feel free to type your questions in the chat box or on Facebook. My team will pick it up, and then we'll answer some of these questions. We'll try to go through as many questions as possible. Now, this is how it's going to go, okay? I don't just want to regurgitate for you what's happening in the markets. We'll do some of that naturally. But if you see the headline, the headline is essentially, how do we trade and manage the markets from now until the end of 2022? And I want to focus on a couple of things, all right? Number one, macroeconomics, so that you guys understand the backdrop and the context of what is happening, okay? So we will probably talk a little bit about inflation, in fact, quite a bit about inflation. Some of you who are following the news, you would know for now that the rate of inflation in the US is at a 40-year high. All right, and that's huge. Okay, whatever that means, we'll unpack it. So I think let me just bring in the guests immediately. We're gonna have a lot of fun for us together. Before I bring in the guests, let me just do a quick introduction of who they are. All right, the first one is Jimmy Chu. All right, after I introduce them, my team will bring all of them in. All right, they're already on standby. So Jimmy has been featured in tons of media throughout the world. I think this is a treat that you guys are going to get, because not only has he been featured extensively in English and other media, especially on China media around the world. In fact, today, if I'm not wrong, I'll ask him this. I think it was today. Today he was featured in Shanghai TV. All right, so you're going to get a chock full of knowledge from Jimmy. All right, Jimmy will specialize, or rather all of them are specialists in macroeconomics, but specifically I chose them. Macroeconomics aside, Jimmy will touch a little bit about the stock market, yeah, primarily on the stock market. And then we'll have Wayne Cole. Wayne will join in, and as he touches on a bit on macroeconomics as well, his primary focus will be a little bit on the currency market, yeah. So feel free to ask questions, anything that deals with the US dollar, the Japanese yen, or even the euro. Okay, so Wayne is a specialist in that. And then we'll have Louis. So Louis is going to speak a little bit more in depth on the crypto market. Everybody knows the crypto market has been dropping. All right, I think over the weekend it touched a low of 18,000 plus. Is now starting to climb up towards 21,000 for Bitcoin. So we want to hear his insights. So I prepared all this for you guys. I hope you will enjoy yourselves over the next 45 minutes or so. Can I get my team to bring in my 3 special guests now, please? Okay, gentlemen, looking smart, huh? Obviously not with my handsome hairstyle, but welcome Wayne, Jimmy, and Louis. Why don't each of you just say a quick hi to our audience who's logging in now? Anyone? Just
okay, I'll go first.
Wait.
Unrehearsed. Yeah, Mario, thanks for having us on today. And he's very glad. Hey, Louis, how are you?
Hey, I'm good. I'm good. How's
Jimmy,
Greg?
Jimmy is over there. Yes, Jimmy all the way from Shanghai. Yes, I can see a lot of familiar names that is logged in tonight, and of course, those of you who know me or see me for the first time, I'm glad to have you on our live show together. I hope that for the next 45 minutes, I have the chance to share as much insights as possible and add value to everyone in terms of your trading investment journey in the next second half of 2022. Yep. Over to you, Jimmy and Louis.
And
Jimmy? Jimmy, let's
Jimmy,
go.
you were
Jimmy.
on Shanghai TV. Was it today?
It's today, but it will be played tomorrow. So
Okay, great. I'm going to talk to you a little bit about what you spoke on Shanghai TV. If you can give our audience a scoop about it, but I'm just reminded of a story, and I want to just open with this story before I immediately engage you guys. Okay, this is a true story. Albert Einstein. Everybody knows who Albert Einstein is, right? So the story goes that Albert Einstein was sitting in a train. Okay, he bought his ticket. He's going from one place to another place. Suddenly, he saw the train conductor coming to check his ticket. And Albert Einstein, in a very flustered manner, he couldn't remember where he put his ticket. So he was flustered trying to look for his ticket. And then the conductor came and he said, Mr. Einstein, don't worry. I know who you are. You're Albert Einstein. You're one of the smartest people in the world. It's okay. I trust you. All right. And then the conductor just went on his way. And then suddenly the conductor turned back again just to check whether Albert Einstein was okay. And he still saw him looking for the ticket. So he got puzzled. He went back to Albert Einstein. He said, sir, it's okay. You don't need to show me the ticket. I know who you are. Albert Einstein said this, yes, I know you said you know who I am, but I forgot where I'm going. That's why I need my ticket. And here's the moral of the story, okay? He didn't know where he's going. And I think that sums up the emotions of many of us who's on this roller coaster for the last few months. Many people have been asking me, where are we going? Okay, so this will be one of the main topics that we'll be discussing. Jimmy, I want to start with you, right? Give us a heads up. Here's the question I have for you. What I put on my Facebook page last week, the Fed obviously has hiked rates 75 basis points. Even prior to that, right, guys, we all know on the 4th of May, they already hiked it 50 basis points, 0.5% on the 4th of May. And that was like, I think its highest hike in 2 decades. And then immediately on the next FOMC, they hiked it 0.75%. So on the basis, I think everybody understands this is to combat inflation. Yeah, and then the Swiss National Bank hike rates, the Bank of England hike rates, and I think over the next few days, Bank of Canada is going to be following the Fed to hike rates. So, Jimmy, specifically, I want to hear your thoughts, right? Are they on the right track? What are you seeing unfold in the next 1 to 2 months with all these rate hikes around the world? Jimmy.
I think we need to talk about two parts. The first part is what happens now. And I think not many people really understand what happens now. Why the Fed is hiked 75 basis points? No one understands. If we listen to what Powell said maybe a few weeks ago, he said the Fed is never going to raise the 75 basis point just because of one CPI at 8.6%. Does this change his mind? This tells me two things. The first thing is the Fed is losing the control of inflation. So let's talk about whether it will be effective to hike 75 basis point or 100 basis point, whether it will be effective later. We will talk later. But at this moment, the Fed is losing the control. That's why the Fed is busy with chasing the curve. And number two is, this really worries about me is, on Friday, inflation data is out. And on Monday, CNBC and the Wall Street Journal report that the Fed is going to raise the rate by 75 basis points. So the Fed is only react after the May CPI is out. So which means they are not predict. So they are not. So they fail to predict the current inflation level. So having that said, neither these two factors investors don't like it. But one is they fail to predict. Number two is they're not credible. So let's talk about the next thing. Hiking the interest rate helps? It doesn't help, in my opinion, because now the problem is not at demand. The problem is at supply. Imagine I have a supermarket and I'm going to sell something last time at $10. Yes, last time I get the products from the wholesaler at $5. When the economy is not good, okay, I cut the price to $8, to $7, but now I get the price at $9. There's no way for me to sell the price below $9. And now you are going to talk about you are going to raise the borrowing cost. So when you raise the borrowing cost, you are adding my burden. Every corporation from small to big, they will all more or less they will have some debts. So when they raise the interest rate, there are something like increase my debts. So the more interest rate the Fed is going to hike, probably we will see the higher price until the recession comes. But before the recession comes, what can Fed do? Raise the interest rate. And we talk about the SMB. SMB is a featured dovish central banks. Now they have already started raising interest rate by 50 basis points. Okay, imagine how severe the inflation it is. So without going further, I think the central banks, especially in the developed economy, really have the problems to control the inflation at this moment. So the conclusion is they have to hike, and hike.
Okay, question. I think you touched a raw nerve, which is fantastic. Thank you for the insight. You know, when you mentioned that inflation at this point of time is more a supply issue, not so much a demand issue. But bro, what other choice do they have to control inflation? One of the tactics of the central banks is always to raise rates. If you feel it doesn't work, what else can they do?
Obviously, I think central banks is not in a good position to solve the problem, but the politicians and everybody think it's just the Fed job, it's policymakers' job. I just see a news from China this morning. There's some news are talking about the officials, not the PBOC, the Chinese central banks, are going to solve some raw material price issue. So the current problem is really not an issue of central banks. I think at this moment, lots of countries' head or the policymakers, not the monetary head. The other head, it could be from the fiscal department, it could be even the PM or some level even higher, to cooperate together to solve this supply chain issue, and whether can hand by hand, work close together to solve the issue. I think that's the right way. But that's, of course, not the thing we discussed today. We just talk about, did that thing not happen just at the ECB and the Fed to solve the problem? It's never going to be solved. And there's one very interesting news last week from ECB. ECB, we all know, is going to raise the interest rate next July, right? But I think hours ago, the FOMC meeting last Wednesday, ECB, there's a news say they are working something like lower the borrowing cost for some countries' sovereign debts. I was very confused. You are going to raise the cost, or you are going to drop the cost. So of course, I think that when this thing happens, I believe there's a lot of difficulties in the inflation side. So for investors, we just need to know one thing: this inflation is not going to solve in weeks or months. It's going to stay with us for a long time. So be ready that we probably is just at the beginning of central bank's rate hike cycle. The rates, they probably will be much more higher from the current level. Back to 40 years ago, the Federal Reserve raised the interest rate to 20% to tame the inflation, control the inflation. Now the Fed raised only about how much percent? Maybe less than 2%. So having that said, I think for this run toward the end of next year, I'm really not surprised if the terminal rate, the interest rate at the end of next year, somewhere around 5%, 6%. I'm not surprised. So
I won't be surprised. They did say that they would, be doing something like that. I just want to make a quick comment. You sound like a politician, when you say, they got to get their act together and solve the supply chain. It's not going to happen soon, bro, with the problems in Russia and Ukraine.
Yeah, that is my point, because it's not easy to solve the problem. For the investors, they need to know it's not easy. So if it's not easy, just be ready for a much higher interest rate. So that's my point.
Okay, I want to talk about stocks, but after you mentioned these things, maybe I just jump to Wayne, who's the currency expert here. And Wayne, maybe speak a little bit about in the currency market, right? With whatever Jimmy is saying, give us something specific in the sense that if you look at the top 3 currencies in the world that people are trading, say the US dollar, the euro, and the Japanese yen, with whatever Jimmy is saying, that there's a possibility of rates going to like 5 to 6%. How do you see the currency market playing out over the next couple of months?
Good question, Mario. Actually, the interesting about currency market is that it can go as high as it wants and can go as low as it wants. Just to share a bit of history, since I started trading the currency market in 2007, right? At a point in time, the dollar yen was at 125.
Sorry, Wayne, sorry.
Am I the only one hearing the buzzing
No,
sound?
I think your mic has some issue because I'm hearing some alien talking as well. I think your mic has some static. Yeah.
My mic, is it?
Yeah, I think it's your mic.
Yeah.
Hey,
Okay, it's my mic.
Yeah.
Okay,
Okay,
so
maybe what I'll do, right? I just
Yep.
I took out that
Much better.
much better. Okay, it proves one thing:
That you bought a cheap mic.
better than Jabra. Okay, joke aside. So back to the topic. Where was I? Okay, since I started trading 2007, dollar yen was at 125. And then the financial crisis hit. We have seen the dollar yen keep on dropping, and people will say, hey, how low can it drop? And it dropped to a low of 79. $1 to 79 yen. And what I'm seeing now is the exact opposite. The dollar yen is going up and up and up. It has gone back to the almost the same height as starting of year 2000 of 135. If you ask me if the Fed is going to continue to raise interest rates, I, as a trader, very simple, I'll just go long all the way as much as possible. As much as
Sorry,
price.
long what? Where are you going long? Long
Dollar yen, right? Yeah.
Yeah. So long dollar yen. That means if interest rate, like what Jimmy has mentioned, if the interest rate is going to hit towards a 5-6% by end of the year, I think I'll just keep on buying throughout the time that I make my profit along the way. It can go as high as 1504. I care, honestly. I just want to be on the right side. Yeah, so that's the beauty on the currency part of things. Yeah.
Any quick input on euro dollar? Like, where do you see euro dollar going?
Okay, euro dollar will be interesting. Like next month will be the ECB press conference. Of course, if you look at all the major central banks, right, there are only 2 central banks has not gone on board the bandwagon of rate hike. First is Bank of Japan, and the second one is ECB. And interestingly, both of them will have their press conference and interest rate announcement on the same day next month, 21st July. So if you ask me, the euro most likely will follow the big boy of USD and start tightening. So one of my, on the side note, if what Jimmy said is really true, Fed is whatever rate hike, they are losing control, but we are seeing the other central banks following them. So is it a case whereby it's a blind leading the blind, whereby all the other central banks are also heading in the wrong direction as of now? Yeah. So that's, yeah.
So essentially, you are looking at a short euro dollar and a long dollar yen.
Yes, correct. So of course, short term, if ECB increase interest rates, of course, in the short term, euro dollar may rebound a bit. But even the more aggressive stance of Fed versus ECB now, if euro dollar goes up, it just gives me a better chance of shorting the euro dollar.
Got it. Louis, any input in terms of, in the news, we are hearing some stuff about the Bank of Japan, right? That's saying that they might be doing some kind of intervention. Any specific thing you're looking at the Bank of Japan? I don't know, bond yields or what? How can that dovetail to refine a little bit of what Wayne is saying in terms of the long dollar yen trade. Any thoughts on that?
Yeah. So I think for the long dollar yen trade, right? I mean, it might still work, right, for the longest time, right? But what we are seeing now is a possibility that Bank of Japan could come out, because we are looking at Bank of Japan. They have an ultra loose monetary policy, right? So they are ensuring that their yield will always be at 0.25%, right? So they are throwing unlimited budget or money, right, to ensure that the yield is always kept at 0.25%. So they're buying all the bonds that is possible in the market. But what we saw last week was that the yield actually went up to 0.26%. So people are asking, how is that possible, right? If you are throwing money unlimited, right? They have, I think Japan have $1 trillion in reserve, right? And they are buying bonds with no limit. And you still manage to climb up to 0.26%. So what I think is happening is that there's a possibility that the selling rate of the bonds is faster than whatever Bank of Japan can buy, right? And I don't think Bank of Japan can continue this rate of ultra loose monetary policy and ensuring that they are sticking to their current monetary policy. I don't think that can happen for a very long time, right? So they might have no choice, right? So as in, I think Japan is happy, or Bank of Japan is happy because inflation is moving higher, right? After decades of low inflation, they are happy that it's moving higher. But what they are facing now is a currency crisis, right? So what I feel is that Bank of Japan might have no choice but to intervene. And when that happens, right, so I think Bank of Japan actually had a meeting and there were some notes that were handed out and they mentioned that they will intervene if needed. So this means that dollar yen could be one of the biggest trade possible, right? And what I mean is that we could be looking or positioning for a potential reversal, a huge shot, if Bank of Japan were to intervene. So I think that is one of the possibility or one of the biggest trade that you can take, right, for the near future. But of course, whether it happens this month, next month, we won't know, right? I think that is, but you should take note of that, right? And as much as you go long on your dollar yen, but your risk management must be very, very important, because you don't know when that trend will end. As much as the trend is a friend, right? You just be careful on that. And if you just furthermore, right, if you want to hedge your position, what you can do is you can short the Nikkei, right? Short the Nikkei and long, and you can position your dollar yen trade as well. So if anything happens, right, the Nikkei will go down, right? When yen strengthen, Nikkei will go down as well. So if you don't want to take a dollar yen short, right, you can possibly look at a short for Nikkei. Yeah, and on our platform, I think we have Nikkei as well. So just take note of that.
I love that. Like going long on the dollar yen, but interim to go in short the Nikkei. I understand that. Let me come back to Jimmy for a while. Jimmy, are you still there?
Yeah, I'm still here.
Now,
hey,
since
before you say any questions, right? Allow me to add in some euro or yen. Yeah, because I haven't really talked about. You guys know that I haven't really talked about Forex for almost a year already. So I always talk about stocks in the media. So I think euro, I think it's a very critical play in the second half of the year. Because yes, ECB is going to raise the rate, but it seems like ECB won't raise the same scale interest rate as the Fed. Probably they start with 25 basis point, maybe it can pause for some time. So I think, yes, some people are saying the ECB is also going to raise the rate. So with that, depress the dollar value. So from the ECB point of view, I think they just start very moderate 25 basis point first, maybe. And I think the real problem in the euro area, the economy, is probably toward the end of the year. And now it seems like no one talked about the natural gas shortage or oil shortage in the region, because euro is summer now. But after the third quarter, probably moving to September, November, the weather is getting cold. And I don't think the issue between Germany or Italy with Russia, the natural gas problem, will be solved. So I think when the supply, when the winter comes, the natural gas supply could be another issues. Then people will really see the problem of euro. So
touch a little bit on the dollar yen. You said you wanted to speak a bit about the yen.
Yeah, the dollar yen also. This one very quick. Based on my experience in the past 10 years, Bank of Japan intervention never have a long impact on the yen. So based on the current fundamentals, I think as long as the energy price stay high, because Japan is one of the biggest oil importers, as long as the energy price is high, there's no way for yen to become stronger.
Yeah.
Okay, good, got it. Jimmy, hang on that thought. I wanted to speak a little bit about the stock market now. I mean, we touch a lot on macroeconomics. I want to be a bit more specific. We got some input from you guys in terms of where we are looking at dollar yen and euro dollar. Jimmy, are you looking at any specific stocks? I mean, with the inflation all going now, speak a bit about what are you seeing? How is it directly impacting maybe the tech sector or even the food sector? Any particular stocks you're looking at, Jimmy?
Probably, I think let's touch a bit about everyone interested, maybe Tesla and the Walmart, because I think that still is the benchmark. Let's talk about
Tesla and Walmart. Interesting. Okay.
Yeah, maybe we also can talk about the retail sectors with the tech sectors. Okay, let's talk about the tech sectors first. I think as long as the Fed is going to raise the interest rate, the bond is going to get higher. I think there's more room for Nasdaq to move lower. So Tesla, of course, I think it has more room to go lower. I think also with other tech stocks, it's not only Tesla, it's the entire tech stories with the Fed. Well, I don't think the interest rate go to 4%, 5%. The US 10-year the 10-year bond yield is still at 3%. That doesn't make sense. I think the 3-year bond yield easily probably will go to 3.5, 3.8 toward the end of the year. So as long as the yield is moving higher, I think the current level of the Nasdaq, definitely, of course, I think has got more room to go down. But I'm really going to talk about the tech sectors is that I think that after the pandemic, the value of the innovations of the technology, I think still a very important play. That's why I think the Cathy Wood is her ARK Innovation Fund still got so many people buying this, because people would think that this kind of turmoil is a long-term investment opportunity. So the words here is very clear. If you are very short-term investors, just stay away with this kind of tech stocks, because it's really very dangerous. You either stay away or probably you can short it with some protections. But if you are a very long-term investor, you are looking at maybe 5-year, 10 years horizon, then probably I think this current valuation of the US tech stocks maybe provide some value. I mean, think about the thing happened 20 years ago, the dot-com bubble. The stocks, yes, initially the tech sectors dropped, but they are quickly recovered in 2002, then all the way back to all the way to 2008. So I think for long term, yes, it is investment. But let's talk about the Walmart first. Walmart is the
hold on, Terry. Before you go to Walmart, I mean, as a summary on your tech sector, right, of which Tesla is a part of it, you are saying that if an investor or trader is more short term, naturally is to you're looking at a lower to short the market essentially. But if you have a slightly longer horizon, what you are saying is that there is obviously a possibility of a rebound, right?
Yeah. Okay. Maybe because of my habit, since the pandemic happens when the Federal Reserve raises the rate, I just share my personal experience. I don't really feel comfortable to shorting the US stocks, because if you cannot come back, let's say for a month, then the damage is very big. But I just maybe probably use like there still will be some downside room for the tech sectors. Yeah, I think that probably is more appropriate to express my view.
Would you not advise, but in your opinion, instead of like selecting Tesla, Amazon, Netflix, whatever, to short, would it be a better play if you're looking at it as an index by itself? Like example, shorting Nasdaq or the S&P or Dow Jones. Any thoughts on that?
Yeah, I think if you really want to short for the short term, I think the tech sectors, probably shorting the tech sectors will be much safer compared to shorting with the value stocks. But I think you need to look at the bond yield very closely, because you see, as long as the bond yield move lower, the Nasdaq is also the first index to rebound. I mean, we are living in a very volatile period. So those kind of the risk off will also press the US bond yield move lower. So that's the risk side. But in general, I think the Nasdaq index probably will have much more downside compared with the S&P 500.
Got it. And then
Mario, can I add in here? Yeah. Can I add in here? Yeah, so I think Jimmy, you're right. So I think for the tech stocks, right, I think shorting the index will be a better play than shorting Tesla, and I totally agree. And there's another reason why, because Tesla is, I would say personally, that is heavily manipulated, right? Because a tweet from its CEO, it can change the market by 20%, by 10%, right? And it's like, flipping the prata, right? Some people call it, in Singapore, we call it, he can change his mind overnight, right? So suddenly he say, I want to buy Twitter, or I don't want to buy Twitter, So the volatility is so high that, shorting Tesla per se on its own might not be worth it. If we're talking about risk management issues, right? So of course, I think Jimmy is totally right. Shorting the Nasdaq might yield you a better risk to reward, right? Because you know that as a whole, right, the tech companies are moving lower. Or even if you want to short Tesla, right, EV. So EV per se, I think other companies that is EV related, right? I think there's Li Auto. There are many companies that are EV related. They might have a better risk to reward ratio as compared to shorting Tesla because of how manipulated it is. Yeah. So back to Mario. Yeah.
In fact, even
the other one trade is end of last year. I entered this trade. Actually, I carried for about 2 to 3 months. Is I use a hedge. I sell Nasdaq and I buy S&P 500. Then in the end, on the Nasdaq part, actually the profit I earn is much bigger than the S&P side I'm long. So that's another strategy for the conservative investors like me.
Okay, question on that. When you say, because that means to say you are expecting obviously the Nasdaq to fall more, and that's why you do a hedge on the S&P long. Is that what you're saying?
Correct.
Wow, smart man. I didn't think of that. Well done, gentlemen. Okay, Jimmy, go quickly talk a little bit about Walmart, because you talk about Walmart. Then I want to go to Louis on crypto specific. What would you like to share about Walmart?
I think Walmart is shares every investor need to watch now, because I think that's the stocks actually will point to how real the U.S. recession is coming to us. I think that's the question now. Every market participants actually they are getting very interested. So I think the Walmart, Target, this kind of big retailers, they are issued a warning that our business is getting tougher and tougher, something like that. And U.S. the consumer confidence also dropped to multi-years low. The U.S. economy is about 70% based on the consumption. So if the Walmart stocks is getting lower and lower, I think all the investors, no matter you are from crypto or you are from stocks, you are from bonds or you are FX, I think you really need to take care of one thing. Is you watch for one thing is, does the U.S. recession is really coming to us? In my opinion, probably it will come next year. Every Fed hiking cycle, it will lead to the recessions. And the last time, most of the Fed hiking cycle is a moderate one. But this time, the hiking pace is so aggressive. So I think based on the current U.S. consumer confidence and inflation pictures, I think the recession is probably very near to us. Once that moment getting real, then the Walmart, this kind of retailer stocks, probably the pace they fall would be much faster than the tech stock, the tech sectors. And when the recession comes, I think there will be very big changes in the U.S. different sectors. People will start to pray, or at least expect the Fed probably, in some certain point of time, they will start raising the rates or even cut the interest rate. The Wall Street expectation also always very wide. When that kind of expectation coming out, then I will see probably you will see some rebound in the tech sectors, because these kind of stocks, they're highly relevant to the U.S. bond yield. So I think from that pictures, Walmart versus Tesla, it tells a picture of what the U.S. economy is going like to be in the next 12 months, and what's the Federal Reserve policy is going to be in the next 12 months.
Wow, you guys sound really intelligent. Okay, let's touch a little bit on crypto. We should be doing this more often. So the audience, if you guys are enjoying this, right, just drop in some comments. Let us know if you're enjoying the depth of knowledge these handsome gentlemen have. Louis, let's talk a little bit about crypto. You are, at least among the four of us, definitely more of a crypto expert. speak a bit about what are you seeing in the crypto market. I don't think we can avoid the Luna discussion, that what happened with Luna over the last 1 month where, I mean, I was watching it. I don't know whether you guys are watching it. $90 to zero in 8 days. I think I got that just about right. So speak a bit about what are you seeing in the crypto market, and more specifically, any juices, give us something like what tell us about the background and what to look forward to, bro.
All right. Thank you, Mario. Right. So I'm definitely not the most crypto expert, right, that you'll probably know, right? But I'm very, very in touch with what's happening in the crypto market, right? But before that, right, let me just take a minute to talk about, the interest rates and the sentiment as well, right? Because I think what Jimmy had mentioned, whereby Federal Reserve have no choice but to raise rates. And even though that's not the tool to combat inflation, which is a supply chain issue, right? But what I'm expecting is that, Federal Reserve this time might do what we call a Paul Volcker move, right? So if you guys don't know, Paul Volcker is a Federal Reserve in the 1980s, right? And he's anti-inflation, right? So he will do whatever it takes. So he raised rates to, I think, 20%, right? And unemployment reached 11%, right? So I don't think it will reach that bad, but I think that's the direction that we are heading. Okay, so now moving back to crypto, I think most of you guys who are invested in crypto, right? Be it you are buying BTC, Ethereum, you are trading it, I think you guys have seen what unfolded, right? My condolences for those, right? Because I'll be very honest, right? So I was burned a little, right, by Luna as well, right? I was a great believer. As much as, I did a lot of research, I read out a lot about, unfortunately, right, when the death spiral happens and when people run, right, this is what we call a bank run, right? When people start to withdraw and they panic, no one can survive that, right? Even traditional finance institution, nobody can survive that. But of course, they might be able to stop your withdrawals, right? But ultimately, if everyone withdraw, no one can survive that, right? Because everyone is doing what we call a fractional reserve banking. Basically, if they have 100 million, right, technically they only have 10 or 15 million in their bank, right? Most of the funds are everywhere, right? So for those who are burned by cryptocurrency, right, don't give up, right? I have this phrase for you, right? Cleanse your mind of your peak worth, right? Cleanse your mind of your peak worth.
Mind of your what?
Your peak worth. Peak net worth. Your peak net worth, right? Cleanse your mind of your peak net worth and position yourself for the future. Okay? So this is what I'm telling myself, right? You might think that, hey, wow, I have 2 million, in BTC, Ethereum, Luna, but now I'm left with 5,000. It doesn't really matter, right? Because, there are still a long way to go. Okay, so let's talk about what happened, what unfolded, right? So in the crypto market, what we saw was that there was this cryptocurrency called Luna and UST, right? So I won't go into details, but you probably heard it or read it somewhere, right? So basically, UST unpacked, and because Luna was pegged to UST, right? So wherever UST unpacked, Luna needs to be burned, right? To be sell off to cover back the depegging of UST, right? So what happened was that there was a death spiral because there's a huge influx there's a huge outflow of withdrawal on UST, right? And then there was depegging, and what we saw was that UST from 1:1 to US dollars, right? That was what they promised, and it turned, I think currently is worth $1 to 0.01, right? 1 cent basically, right? So UST is worthless. Luna, because it's reliant on UST, right? If UST perform well, then more Luna will be burned, right? But when the UST fall in price, more Luna will be created, right? So I got it wrong, right? So moving back, so Luna is worthless as well. Okay, so that was the first thing that happened, right? There was a huge depegging. Luna at one point in time, it was a top 10 market cap. So in history of crypto, right, we haven't seen a top 10 market cap currency lose its value to almost zero in 8 days, right? So this is actually unprecedented, the first time that we saw. Okay, and then what happened now, right? So, sorry.
20-30 billion.
I think it was almost 40 to 60, I can't remember 40 or 60 billion, but it's bigger than the Lehman Brothers fall, right? So it was even bigger than what happened in 2008. If you compare, 1:1, right? So back to the point, so that has a contagion effect to other platforms because a lot of lending platforms, they are actually putting money into one of the protocol on Luna, right? It's called Anchor, right? So I'm pretty sure some of you guys who are in crypto probably heard of that, right? So the first platform that fell, right, was Celsius. So Celsius is essentially a lending and borrowing platform. So You deposit your coin and then you get interest, right? It's like a bank, right? So, they have been talking, their slogan is, unbank yourself. Unbank yourself. So, of course, how ironic currently, right? Because currently they have pause withdrawal. You can't withdraw from Celsius. So it's as good as saying that they are insolvent, right? Because you have money inside, but you can't take out. And they owe a lot of other platforms money as well. So that's first. So that was the first platform that fell, I would say, right? So even though they are still around, but I don't think you can deposit, or you wouldn't even want to deposit. And then the second was another company, a hedge fund called Three Arrow Capital, right? Or some people call it 3AC. So similarly, they were highly leveraged, right? They borrow a lot of uncollateralized loans from all these platforms. For example, Celsius, they borrowed from BlockFi. And what does it mean? So uncollateralized means, right, I go to Celsius and I say, hey, I'm from 3AC. Can I borrow 500 million of this coin, right? And then they will say, okay, so what do you put as collateral? They will say, oh, this is uncollateralized. Trust me, bro. So it's essentially this line, trust me, bro, right? So I think those that are in crypto, right? Oh, so when you post something, they'll ask, oh, where's your source? Then the source is essentially, trust me, bro, right? And of course, I think one of our viewers, Galen, mentioned Nexo as well. I think Nexo is also facing some issues with liquidity. So the hedge fund that is collapsing. And for those who read up, or for those who are in Singapore or in Asia, right, you probably heard of this guy, right? This founder of 3AC called Suzu. He was one of the guy that made to the headline news, whereby he bought GCV, what we call a very expensive property, right? A very, very expensive property for, I think, $48 or $36 million for his kid, right? So he put the property in his kid's name, right? So you can see, how all of these are somewhat connected, right? And so what we are seeing that hedge fund has fell. We are seeing BlockFi, Nexo, a lot of other lending platforms are falling because of the exposure to UST, and stuff like this. So these are the problem that is happening. So what I feel is that this is somewhat expected already. Okay, so let me explain. Even though I never predict that it happened, but I think somewhat a lot of people are waiting for this opportunity or knowing that this will happen, because everyone knows that Federal Reserve was going to withdraw liquidity through QT, right? They are using quantitative tightening, right? They are withdrawing liquidity, and what we have in the crypto space, so we saw that the stock market is shit, right? Stock market is shit, everywhere, every asset. So they are saying, oh no, there's no asset I can put in because every asset is falling. Some people say, oh, I can put money in gold. But if you look at gold, right, technically it didn't lose any value, but it didn't move as much as expected, right? So, but in the crypto space, it was a lot worse because we have a bunch of leverage players, right? People are leveraging, many, many times, 10 times, 200 times, and with all those uncollateralized loans, when the tide goes up, right? So I think this is a phrase that you guys probably heard, right? So when the tide goes out, right, only then do you discover who is swimming naked, right? Now you know who is, they don't have their swimming pants, right? They have been, leveraging upwards. They've been talking about Bitcoin going to 100,000, but now when the liquidity dries up, this is what happens. Okay.
So have we seen the bottom of Bitcoin and Ethereum yet?
Okay, good point, right? So that's my next topic, right? So basically, I think we are seeing a local bottom, but we are not seeing a global bottom. Okay, let me explain, right? So sounds complicated, nothing complicated, right? So local bottom, what I mean by local bottom is that at the current stage, right, based on whatever is happening in crypto, right, a lot of companies are going to bankruptcy. We are seeing a lot of deleveraging, right? All the leverage trades have liquidated, right? Basically liquidated, and we are seeing a lot of deleveraging. So there's nothing much that can push the market lower because no one is selling, no one is being liquidated, right? We're not seeing any sell. We are seeing huge selling pressure, but it's as good as that, right? So the market is getting quieter, right? Everyone's going through some bankruptcy and stuff like that. So, but of course, all this takes time to sort out, right? So companies going through bankruptcy, selling their assets at a discount to other companies and stuff like this. So we're seeing a local bottom, right? So currently Bitcoin is at, I think, 20,000, Ethereum at around 1,000. So this is what I call a local bottom. But whether or not it's a macro bottom, right? So macro bottom will mean, let's look at interest rates. Let's look at inflation. Are there retailers buying? Right? All this is what I call the macro bottom. So I don't think we are seeing a macro bottom yet. And of course, I have some article to show. I just remembered, right? So let me just bring up. Okay, so this article, is just explaining what happened, right? We saw that Celsius is being mentioned. We saw that 3AC is also being mentioned, right? So of course, this already happened. Okay, And then the next point that I want to bring your, okay, so I was talking about the local bottom and the macro bottom, right? So I think the local bottom is here, right? The crypto market, right? I think the deleveraging has done its work, right? I don't think we can see any huge drop, at least for now, right? But I don't think the bull market is starting yet, right? So which is why I call it a local bottom. So for near future, I would say for the next 1 or 2 months, we could see a relief rally. This is where you can start to trade, right? So we are seeing, I potentially is predicting, right? So this is not financial advice, but I think Bitcoin from the 20,000 can potentially move higher to around 25 to 28,000. And Ethereum from 1,000 can potentially move higher towards the 1.8 to 2K level in the short run, right? In the short term, right? Whether or not that is the bull run, I feel that it's not, right? But we should see some relief rally. Okay, then this brings me to the next point. Why the macro bottom? Why the macro bottom is not in, right? So this is a chart showing the savings rate of US, right? So US savings rate actually is very similar globally. We use it as a benchmark, okay? For other countries like Asia, maybe the savings rate is higher because of our culture, right? But US savings rate is always the benchmark, right? So we saw that US savings rate is reaching, I think, 5.5, right? Or 5, right? 5 level. And the last time we saw that level was actually 2008. So what does this mean, right? So this means that people cannot really afford to save. So that's one. And that not a lot of people have a lot of savings as well, right? People cannot afford to save. Why? I think the most obvious one would be inflation, things are getting expensive. Look at the gas price, oil prices, natural gas prices. So all these are causing people to save less. And when they save less, right, what does it mean for the market or for the crypto market? My personal thing is that if you cannot afford to save more, right, you will also not be able to invest any additional income, right? Because your disposable income is already so low, right? You are spending so much on your necessities. What does it leave you with, right? So currently, I think there's a craze, right, for saving money, keeping cash, waiting for the market to recover, and etc. Right? So I feel this chart.
Sorry, Louis. The part that you said it might trigger a relief rally of Bitcoin to say 25,000 or even Ethereum. I think Ethereum is about 1,001 now. You mentioned there's a possibility that because of the relief rally, it may go to say 1,008. Then when you're showing these charts, right, you are saying that because of these charts, it may go to a global bottom and only at a local. Speak a bit about, just very quickly, on the fact that what do you think will cause the relief rally that you will see that slight upswing for at least Bitcoin and Ethereum now?
Very good point. Very good point. All right. So this brings me to my next chart. Right. So this chart, for those who are familiar, this is the commitment of traders. So of course, COT is subjective. Some people say, it's only announced every 2 weeks. How accurate is this? But I think this gives us a glimpse into what is happening. Okay.
But so let me just lagging, right? It's a bit of a lagging indicator.
Correct. It is. I think lagging by a week. So it's post every week, right? But still relevant, right? So just look at the bottom, right? So the bottom, you can see the lowest bottom, you can see small speculators, which is the lowest chart, the chart in blue, right? So speculators are people like retail, like you and me, right? So you can see the retail, they are almost, there's no movement, right? They are dead, right? They're not buying, they're not selling, they are dead essentially. And then let's move up, right? Then there's a red line. The second line is a red line, right? So over here, you can see the red line, we are seeing commercials. So commercials are companies that hedge, right? So they are possibly MicroStrategy, right? So they hedge against their position on whatever Bitcoin they have, Tesla per se as well. Okay, but we don't care about that. What we want to care about are large speculators, which is the line in green, right? So these people are the hedge funds. They are the whales, right? They are the people that can potentially move the market. So you can see that the retailers, they're not buying, they're not selling, they're scared. They're out of cash. They have no money whatsoever, right? It's zero. There's no selling pressure as well. But what the large speculators, which is the whales, what they're doing is they are somewhat accumulating. So you can see the point where they started to buy, right, is almost the start of May. But of course, whether or not they buy and sell, we don't know, right? But what we can see is that there's a trend slowly moving higher, right, whereby the large speculators are buying. And when large speculators buy, right, and with the market, so we just take it as net, right? So net position of small speculators, there's no one buying. But large speculators, hedge funds, they can buy. And once they start buying, right, we will see a push because there's essentially no pressure, right, from small speculators, from anyone else. The market is dead. So anyone with $1 billion can move the market now, right? And what do? So when they move the market, what do they want, right? They want to fish, right? It's like a fishing game, right? They want to fish the small speculators in. So once I see the small speculators come in, and when will they come in? But when they see Bitcoin moving up to 23,000, 24,000, they're like, all right, this is the time where the market is reversed, right? This is the bottom, the local bottom, right? This is where I should long, right? We're going to 100,000. And that's where, what we call the dead cat bounce, right? Dead cat bounce. Yeah. So I think that is what is happening. So for the shorter term, I think large speculators that is accumulating, they will push price higher to lure in the small speculators so that when they sell, then they will have liquidity to sell too, right? So of course, all these are TCs, right? All these are TCs. Whether it happen or not, we will only see. But this is what I'm positioning myself for.
Where can we go and find this COT website?
Okay, so this COT data, if you go for the free one, right? I think it's just numbers, a lot of numbers. For the chart, you need to subscribe, lah. So I think it's 25 USD per month, right? So of course, if you want to know more data, follow us. I might post this weekly if there's enough demand, right, on our page. So if you guys are interested, I can post this weekly. But of course, let us know in the comment section, right? Oh, this is useful. But of course, this is very subjective because it is posted weekly and sometimes it tells you nothing, right? So you have to use this not as a signal to trade, but just as a supporting, I would say, indicator, right? To let you know, okay, where should I position myself? Where are the whales positioning themselves, and etc. Yeah. So that is what I have.
Do we have any questions in the chat box?
Okay, let me see. Okay, trust the air in crypto, right? Okay, most people are very welcoming. They are saying hello. So of course, for everyone, if you have any questions, right, feel free to send it to the comment section. Right, we will take 10 to 15 minutes to answer because it's good to we can communicate as well.
Now, if you guys have any questions, just feel free to type now. But maybe Wayne, let me just ask you this question, right? Assuming whatever I'm hearing from everyone is more like, a recession may come, and if a recession comes naturally, all the risk assets will be sold off even more. So specifically in the forex market, if a recession does come, okay, and I think everyone is fairly clear that the standard definition of a recession, from top to the actual bottom, when you have a correction of say 20%, then you did speak a bit about dollar yen and all. Any thoughts on either indexes of gold or Swiss franc? Anything that you are also seeing when a recession officially arrives, right? Any other trades in the currency market or the gold market that we should be looking at?
Awesome question, definitely. But before I address that, right, earlier on, just to rewind a bit, Louis, you talk about the BOJ direction, and Jimmy over there also mentioned about, based on his observation, that the intervention was by Bank of Japan usually is short-lived. So at this point in time, maybe I'll share a part of dollar immediately to show you how short-lived it could be. So
what chart?
Dollar yen chart.
Dollar yen, got it.
Okay, so what you see over here, dollar yen, you see a very sharp V and reversal. So last week, actually, it was Bank of Japan announcing that possibly they could intervene into the market to hold the rate and things like that. To me, this is what I call as a verbal intervention. So I'm sure Jimmy, when he shared earlier observation of Bank of Japan intervention, usually is short-lived. I think both of us has gone through the era whereby Bank of Japan intervene in the market. They used to intervene fiscally with real money. And then after that, they realized when they intervene, they spend a lot, but the effect is short-lived, as much as less than 1 day, and the price reversed back. Then move on to verbal intervention, which is not very useful as well. So this is a classic example over here. What I've seen they have done last week is that they try to verbal intervention. But as you can see over the chart, in less than 2 days, the price went back to where it was. So moving forward, even if Bank of Japan were to intervene in whatever way, me as a trader, I will see it as an opportunity for me to go long. even better. So when I see a sharp drop due to intervention, I'll just look for a price to go in for buy for dollar yen. So this is what I'm going to do. I would love to see them intervene as many times as possible, and I'm quite sure the market will push it back based on a past historical experience as well. Of course, having said that, nothing is guaranteed in the financial market. So even if I go long, I will have my stop loss to protect myself. Worst case scenario. So I limit my loss if the worst case happen. Yeah. So to answer Mario, your question with regards to when recession happens, right? I would determine in terms of what the central banks are doing, because in terms of the forex market, it is always traded in pairs.
Yeah.
It's always traded in pairs. So I will have to compare what are the different central banks' policy. So my trade, whether it is recession or whether is it bull market, it is always pairing a weak against a strong currency. So how do I know which is weak, which is strong in relative? So I will look at the central bank's policy. Which central bank is more hawkish? I'll pair it against a central bank that is less hawkish or even dovish, because by doing this, it gives me either a trending pair. So example, in a recession, whatever it is, if the Fed is more hawkish, much more hawkish than the ECB, then chances are euro dollar will go down. That's my chance of taking a short trade. Or the Fed may be less dovish, let's say, just for discussion purpose. If the Fed is less hawkish compared to the BOJ, for example, BOJ becomes very hawkish. So instead of going long on dollar yen, because BOJ is now more hawkish, chances are the dollar yen may fall. So I will look at the central bank policies direction to guide me what are the best currency pair to trade. Yeah.
Yeah, I think that's an excellent point. Like, it's a great reminder for everyone, because now, especially when the Fed move, right? You guys may have heard of this saying that because the US is still the largest economy in the world, in a sense that when the US sneezes, the world catches a cold. Because Jimmy is right that they're still a country that 70% of their entire economy is internal consumption, but because they just affect so much of the world, so to speak. One thing I want to share, one of my little tricks, I think I've shared with you guys before, and even for our audience who's listening in, sometimes to get a quick overview, right, like the US dollar, because it is the one that is most traded worldwide, right? It's always almost on every single side of the trade, whether you're looking in Forex, whether you're buying gold, you're selling oil, it is always the one that is being denominated in US dollars. So for me, one of the tricks I've always used to find out about how strong or how weak, to give me a quick idea of the strength or weakness of the US dollar, right? I tend to look at the dollar index. The dollar index. And I'm fairly certain, and anyone can just go and type this on the internet, or you just dollar index, you will be either on Yahoo Finance or MarketWatch.com. And now the dollar index, the strength is, I think, about 104. And the last was at 104 is probably 4 to 5 years ago. So the US dollar is fairly strong. If you're looking at the chart now, everyone is looking, naturally we are seeing that the dollar yen is at what now, 135, which essentially means that the US dollar is stronger against the Japanese yen. So it commiserates with the fact that as a dollar index, which is weighed against a basket of currencies, it is at this moment strong. Yeah. Okay, I think it's a good time for us to wrap up here. Thank you so much, gentlemen. You have given us a lot of things to think about. Galen, how low Bitcoin will go? Wow, I think you guys had your thoughts on it, right? Galen, let me share a bit of my thoughts. I think one of the key things is to look at this guy called Michael Saylor from MicroStrategy, right? This is the guy that, I mean, the last few years that he's going on a rampage telling everybody, sell your car, sell your pen, sell everything to get into Bitcoin, right? And I think that's primarily because he owns the most number of Bitcoins in the world. You know, Louis, anything to share about where is Michael Saylor's coin now? Is he at boiling point to liquidate everything?
Okay, good point, right? So I think there was a few FUD, right? FUD, basically fear, you know, and uncertainty about Michael Saylor's company, MicroStrategy, right? So there was some fear saying that, oh, once Bitcoin hit 21,000, he'll be forced to liquidate. And that was what his COO said, right, during one of the press conference, right? So he mentioned this briefly, and someone caught it, right? Someone caught it. But of course, price hit 21,000 and 16,000. I think the lowest was 17,000, and they were fine, right? And then Michael Saylor came out and said that, oh, we have paid off our collateral, right? Now currently our liquidation price is at 3,500. And he's essentially saying, try us, right? This is our liquidation price. If you can, hit that level, right? And then they mentioned that they can use more collateral to post and to reduce their liquidation price even lower, right? So initially, right, my target price was whatever MicroStrategy can be liquidated, that's my target price of how low Bitcoin can be, right? But given how big MicroStrategy is and how rich Michael Saylor is, right? So I think we probably can't see that level. So if you ask me what is the bottom, how low can it be? To be honest, I have no idea, right? I have no reference, right? I have no reference. But what I think, at least for now, right, if you want, right, I think a short-term trade going long on Bitcoin will do you good, right? Not financial advice, but I think for now, we could see the rebound. So don't be scared yet, right? You should stay slightly towards the bullish side for now, right? For the short term, of course, you know, if you have any profits, take it, take your capital, shift your stop loss if you can, right? That will be one of the best plays now, right? Instead of trying to find a short at this point of time, right? For Bitcoin at least. So I don't have an answer, right?
When you guys take your profit, come and treat
Another thing about
Jimmy, yes.
Another
What
thing
would
about,
you like to share?
about the coin price is
Oil price. Now you're talking about oil. Yeah, of course you can. Oil, let's go. Jimmy.
Okay, maybe a bit lag. Okay, I talk about the Bitcoin first. I think the Bitcoin probably more interesting than the oil prices. Okay, for the Bitcoin, okay, first is we have to identify that how much price rally in the past few years just because of the Federal Reserve. I believe the reason could be very major. Okay, so now the Fed interest rate is about close to 2%. Maybe we can look back. I didn't really look back. So when the Fed interest rate is about 2%, maybe it's sometimes around maybe 2018 or 2019. I think 2019 when the interest rate is about 2%, where the Bitcoin value at. So maybe that one can be a reference. But of course, that one I'm talking just purely because of Federal Reserve liquidity. So if, of course, there's other factors, but I think the Fed interest rate, it could be a very good gauge. If you find that every interest rate, let's say every 50 basis point from the Fed hike is equivalent to how many Bitcoin's value drops, I think if you can get that kind of calculations, probably it will give you some idea, because I have studied Bitcoin's correlation with other assets, but I find the correlation is very low. It's really very low. So now probably, you know, if we can do a comparison between the Fed interest rate with the Bitcoin prices, it might give us some idea. Yeah.
Sorry, Fed interest rate to Bitcoin positively correlated or negatively correlated?
Negative.
Yeah.
Of course, the Fed raised then.
Yeah, so that means basically it's obviously seen as a risk asset.
I don't think we have such good math, but let's say every 50 basis point Fed rate hike, probably it will, you know, the Bitcoin will drop maybe 5%, 10%, or 15%. So if we can get that kind of math out, then probably it will give us some guidance, you know, where's the bottom of the Bitcoin. So that's just one of the reference we can looking at.
Okay, and your quick thoughts about oil?
Oil, I think the price probably will go higher toward the end of the year. Provide there's no recessions. Simply, I think the Eurozone relationship with Russia seems like, you know, yes, the war is about getting eased, the tension is about getting eased, but the sanction is to still carry on. So no matter how the demands fall toward the end of the year, I think the supply issue might become a bit more severe. So in the oil prices, think about this. If the oil price is so easy to drop, it's going to decline in a very near term. Why the Federal Reserve and the other central banks are so rushed to, raise the interest rate? Because they think that this is the time the oil price will stay on the high side for some time. That's why we need to be rushed. If Jay Powell would think the oil price, let's say, would decline to 80 or 70 toward the end of the year, this guy will just sit back and relax. So this is from the supply perspective, from my point of view. So I think whether it will go to 150, I'm not very sure because I don't have the crystal ball, but I think the oil prices probably will stay for high side for some time.
Got it. Clear. Fantastic discussion, gents. I think we can leave it here. Let me do a quick summary for everyone before we leave. So Jimmy was looking at tech stocks. He was looking at indexes, Tesla, Walmart. Wayne was looking at the dollar yen. He's very bullish on the dollar yen. In terms, and in fact, even on the Bitcoin side, Louis is more bullish on Bitcoin and Ethereum. But Jimmy was a little bit bearish. All right, he was saying specifically for every 50 basis points, if we can come to a mathematical formula, for every 50 basis points, then naturally Bitcoin will go lower. As a summary, I saw this, I think on the internet. I think it was damn funny. Someone, I think it was two people were talking in a cab. Then someone was saying, can I be a multi-millionaire trading Bitcoin? And the person looked back and he would say, of course you can, if you were a billionaire first. So I think, whatever we shared, yes, I think in the long term, right? The long term, honestly, what we can really take away from this discussion, guys, there are absolutely opportunities in the market, even if a recession comes, right? Naturally, we know, and we are all in the financial markets, we know that many more millionaires will be minted in a recession. So the key thing is not to stay away. The key thing, guys, is that, and I'm speaking to everyone, especially those who are logging in now. Okay, whatever knowledge you are hearing from all these gentlemen, your last 1.5 hours, I hope you enjoyed it. All right, and I hope it gives you some food for thought. Whether or not you are looking specifically in the stock market, in the currency market, in the crypto market, just ensure that whenever you're looking at reward, all right, it is also important for you to hedge your risk. Okay, there is no such thing as a risk-free play. When you're in the market, it is always important to protect yourself. So Jimmy, Wayne, Louis, thank you so much, guys. For those of you who are logging in, if you guys enjoyed this session, if you're still here, all right, show the boys some love. All right, tell them how much you appreciated them in the chat comments. And if we see enough good comments, if we see enough fruitful and productive comments, we might do another session soon. All right, thank you so much, everyone. Have a wonderful week ahead. See you guys. Bye-bye.
All right, thank you.
Thank you, everyone. Bye.
See you guys.